If you want to potentially become much more profitable and build real wealth in the stock market, you've probably wondered if the Motley Fool or Zacks is the golden ticket. But picking the right one is trickier than it looks. I tested both of them thoroughly for a couple months, and what I found completely changed my mind about which one has the potential to actually grow your money long term. This is the Motley Fool versus Zacks truth nobody tells you. Let's get straight into it. The first thing you need to understand in this comparison of the Motley Fool versus Zacks is that they're built for two completely different types of investors. It's not just about the features and the tools, it's about your entire investing approach and how each conforms to that. The Motley Fool is designed for the long-term investor. Its power comes from identifying great companies early and giving investors a simple, clear guidance structure to buy and hold them for years and not worry about it. They explain the why behind a stock, not the what. So they give you as much detailed information so that you can determine what is the best for long-term investing. It's for you if you have the goal of building wealth slowly and steadily without needing to stare at stock charts all day. But don't just take my word for it. I dug into user reviews to see what other investors are saying. One long-term Motley Fool investor with over 12 years of experience shared that the Motley Fool has pointed them to many companies that have done very well. They said that while there have been some losers, their overall portfolio has performed exceptionally well thanks to the Motley Fool's guidance. And yeah, don't buy everything that they recommend. It's up to your judgment and which one you think will do better, and sometimes they're wrong, but that's just the real world. And that really mirrors my own experience. It's about the overall batting average, a lot of which they get correct. Not every single stock recommendation, but their method and their recommendations and how that fits into your strategy. Now, Zacks investment research platform is a different thing entirely. It's built for the numbers-driven active investor. Its superstar is the Zacks rank feature, which is a similar, a quantitative system that crunches earnings data to spit out some clear buy and sell signals in the shorter term. If you love data, charts, and a more hands-on approach, Zacks might be your tool. It's less about the story and more about the cold, hard statistics for them. But here, the critical distinction I found during my Zacks versus Motley Fool testing is that Zacks will give you a very powerful signal for buy and sell, but it doesn't give you the deep down conviction to hold through market ups and downs because it's not based on the same long-term and deep information, right? The Motley Fool, on the other hand, kind of educates you and builds that conviction so that you know you're okay with it in the long term. So for most people building maybe a retirement portfolio, that long-term guidance and peace of mind are more invaluable with the Motley Fool. So when you're asking which is better for you, like Zacks or the Motley Fool, you're really asking, am I a trader or investor, right? So now that we see the core difference, let's look at what you're actually getting for your money. I put every major tool through its paces, and the gap between a research platform and a signal service becomes even clearer. The Motley Fool's biggest strength is how it bundles everything into a single, cohesive strategy and platform. It's not just a list of stocks. It's a full education and portfolio management system that helps you learn more about what's behind the companies they recommend. So let's start with their flagship service, the Stock Advisor. This is where most people begin. You get 2 new stock recommendations every month. And let me tell you, their track record is really seriously impressive. They've more than quadrupled the return of the S&P 500 returns over the last 21 years as of November 2025. I've been following the recommendations in a model portfolio, and it's really simple. It's brilliant. You get the recommendation itself, the research behind it, and then you get clear guidance on what to buy, and you can do as much research as you want into everything they present and choose whether or not to follow it. But it doesn't stop there. So for investors ready to level up from that, they have services like Motley Fool Epic and Fool Portfolios. These give you access to a wider universe of recs, including real money portfolios managed by their co-founder, Tom Gardner. I found the access to a specialized research on things like AI and crypto incredibly valuable. It felt like having a professional investment team in my corner. And speaking of AI, the Motley Fool is on that. They've launched some tools like Moneyball, which uses AI to score thousands of companies based on their data. So it's a fantastic way to quickly research a stock and see how it stacks up based on their proprietary data. But does this approach actually work for regular investors? So I went looking for a few answers beyond the company website and the programs themselves, and I wanted to know what other people thought of it. And on Reddit, I found a thread where someone asked, is a Motley Fool Stock Advisor subscription worth it? One user who admitted that, despite being sometimes an unpopular opinion in some circles, said that they think that the Motley Fool Stock Advisor subscription is absolutely worth it if you have the money to invest and actually follow the recommendations. Also, as long as you do your own research, right? They confirmed a key point. Fact is that they've outperformed the S&P 500. Yeah. So that wisely, I think, added a lot of context. Like, it shows how it works if you're investing enough to cover the cost of the subscription, right? Like, if you're trying to keep it in the long term, and you want them to recommend a lot of good stocks that will outperform the S&P 500, then that'll work. If not, like, you could choose like an index fund, right? And Wall Street Advisor had some more comments about it. They raved about their market-beating performance, highlighting that Stock Advisor and Motley Fool Epic have both outperformed the S&P 500 by a wide margin since they were launched. Yeah, so there's that point again, which, yeah, I've seen firsthand in my own research. So, now that we have those comments, and please do look at a bunch of other comments on Reddit, it's good to look into that. Let's compare this to Zacks' core features here. Zacks is built around its ranking system, and it has a lot of other great features that we'll get into shortly. So it is a powerful, data-driven tool. And as one user I came across said in a Zacks review, it's extremely important for his rebalancing. He credited it with helping him to double his portfolio. So yeah, if you use this kind of software wisely and you know how to invest and what to invest in, it can really be powerful. But during my testing, I did notice a really key difference here. So while Zacks does give you a lot of choices on what to do and what to go in and what to go out of, the Motley Fool often does a better job of explaining why you're doing it, and it gives you the full context. And I think it's better for understanding why you're putting money into a stock. So with Zacks, you might get 6 to 10 new top-ranked stocks every day. And I think for an average investor, that can be overwhelming. It might not really be helpful if you don't know which to choose, or you don't know which is going to be more profitable, or you don't know how to find out which is better. The Motley Fool is more curated. It has 2 recs a month, and I think that approach is far more manageable, and they do far more research into the individual stocks. In my opinion, that's more effective for becoming more profitable and building wealth without stressing about, 6 to 10 per day. But like, it depends on your style and what you're trying to do, right? It depends on your trading style and whether you're going for short term or long term. And either way, neither of the platforms is perfect. It depends on the person. It depends on, how you like to use it. But it's also, sometimes things happen. Like, if you're going to make the best choice in your Zacks versus the Motley Fool decision, you need to know the potential downsides before you sign up for either one. Let's start with the Motley Fool, and the most common complaint I found among some, and one that I kind of understand, is that, not every stock recommendation they're going to recommend is going to be a winner. Like, that's the main thing. You'd think that, oh wow, they only give you 2 per month, that every single one of them is going to do so well. But, that's not the case. It outperforms, but it's not going to be a winner every time. One user pointed out that stocks like PAYC and CHWY had performed poorly for them, and that if not for some big winners like Nvidia, their portfolio would be underwater. Which is a fair point. The Motley Fool isn't magic. They have losers, just like any investor, but the key is their long-term track record. They're very transparent that they're playing the long game. They give you all the information that they have and that they've done. 1 or 2 underperformers over a short period doesn't define their strategy, and I don't think that counters the profit that they've generated. And they've crushed the market for like over 2 decades now. It's about discipline and trusting the process, but also understanding why you're investing in each stock. Now, with Zacks, the downsides I found for me were a bit more concerning for this practical and security perspective. Like, here's one user who reported a significant security breach where their personal information seemingly ended up on the dark web. Now, I can't say for sure it was them, but like, in today's world, that could be a major red flag for any service if it came from there, especially if it has all your financial information. Another issue, which was really important to mention, was about the practicality of their system itself. Like, it depends on your style. That same user actually questioned how you could follow all of the recommendations at once, noting that with like 6 to 10 new #1 ranked stocks every day, you need unlimited capital to invest in each one of them, and you have no way of comparing them day to day or knowing which one you actually want to invest in. So this makes the system feel less like a curated list and more like a nonsensical fire hose of data if you don't actually know what you're dealing with, which can lead to paralysis or impulsive investing decisions. For me, this is a fundamental difference and weakness if you're looking for clear, actionable guidance. When it comes to the pricing for the Motley Fool versus Zacks face-off here, the Motley Fool, especially its stock advisor service, is often very reasonably priced, especially when they run promotions for new members. For the depth of research and the long-term track record that they have, I do think that it offers really tremendous value if you're serious about investing. So, for the most current pricing plans, any promotions or discount deals, make sure to check that link in the description below. I'll do my best to keep it updated so that you can always get the best possible price. So, after months of testing, where does the Motley Fool versus Zacks battle leave us? Well, the truth nobody tells you is that the better platform really does depend entirely on your goals. If your goal is to become a smarter, more confident long-term investor and to build wealth steadily over time without the daily noise and to become much more profitable, I think that's more my style, then I think the Motley Fool is, in my opinion, the tool you need. So to get started and to see the current best offer for the Motley Fool, use the link in the description below.